Welcome to the deep dive. Today, we're cutting through the noise, giving you a shortcut to being truly well-informed.
That'd be the plan.
We're diving into a really comprehensive report. It slices across some of the most impactful global trends right now.
Yeah, it's quite wide-ranging.
It blends geopolitical shifts, economic conditions, tech breakthroughs, and some pretty significant social and demographic challenges, too.
Hmm.
So our mission really is to unpack the intricate connections between these areas. They might seem separate, but they're not.
Right.
We want to show you how events in one sphere can ripple through and affect others, often in, well, surprising ways.
Exactly. And the report flags several key findings straight away. You've got these persistent geopolitical tensions, but maybe surprisingly, they aren't always causing huge market disruptions.
Okay.
Then there's central bank monetary policy showing a lot of caution. It actually diverges quite sharply from what the market seems to expect. Plus, significant tech innovations hitting maybe unexpected regulatory walls. And these really profound social and demographic issues especially stark when you look at places like Ukraine.
Wow.
And maybe most critically, the report even forces us to sort of reevaluate our whole modern idea of success. What does that even mean anymore?
Okay, let's start unpacking that. Geopolitical currents first. The report draws our attention to the ongoing tension, U.S. and Iran, specifically focusing on a critical choke point, the Strait of Hormuz.
Yeah, this strait is, well, incredibly vital. You're talking about roughly 20% of the world's oil supply passing through it every single day.
20%, that's huge.
It is. And the report underscores pretty clearly that a hypothetical closure, if it were to happen, would inevitably spike global oil prices.
Right.
And significantly hike up shipping costs, too, because you'd need much longer alternative routes.
And here's where it gets really interesting, I think. The report reveals the impact wouldn't be the same everywhere, not uniform at all. For example, China. Major oil importer, heavily reliant on the strait. They'd be highly vulnerable.
Makes sense.
But then you look at the United States, now a net oil exporter, they might actually kind of benefit from higher global energy prices.
It's counterintuitive, isn't it?
It really highlights how global events can have these, well, asymmetric impacts. Depends entirely on a country's economy, its energy situation.
And what really stands out in the report is the market's reaction, or maybe lack of reaction, to those reported Iranian attacks on U.S. bases in Qatar recently. They were intercepted successfully.
Right, I remember reading about that. But the markets didn't seem to care much.
Surprisingly muted, which suggests maybe a few possibilities. Perhaps market players had some prior info, knew the attacks were more symbolic, or maybe they've just become less sensitive to Middle East tensions, sort of priced it in over time.
Or they just don't think anyone wants a major escalation.
That too. A belief that it's not in the key players' best interests. And the report also mentions U.S. intelligence contradicting Iranian claims about moving nuclear materials.
So for the listener, the takeaway is?
Well, for informed investors, it really reinforces that immediate headlines don't always tell the whole story.
Right.
Don't always reflect the underlying reality or how the market is really assessing the risk. You need that deeper analysis.
Okay, moving from geopolitics, let's shift gears. Let's talk global economy, monetary policy, particularly the Federal Reserve's stance on interest rates. It's always a big one.
Absolutely. And the report reveals a really clear divergence here between market expectations and the Fed's own dot plot for June 2025.
Okay, maybe quickly explain the dot plot for anyone unfamiliar.
Sure. It's basically a chart. It shows where each member of the FOMC, that's the Federal Open Market Committee, the ones who set interest rates, expects rates to be in the future. Anonymous dots on a chart.
Got it. So what's the divergence?
Well, yeah, some Fed officials, like Governor Bowman, saying they wanted rate cuts maybe as early as July. And market expectations for a July cut actually grew, went up to 22% from about 14.5% just a week before.
So the market was getting hopeful.
Right. But the Fed's median dot plot, it forecasts no cuts until late 2025. And even then, only about 2 quarter-point cuts expected by the end of that year.
Wow, that's a huge difference. Late 2025 versus maybe July.
Exactly. It really points to a pretty hawkish bias within the FOMC. You've got 7 out of 18 members seeing no rate changes in 2025 at all.
7 out of 18.
And Chairman Jerome Powell, He's been consistently saying no rush to cut rates, holding that line. Even with political pressure, figures like former President Trump pushing for cuts to save on national debt interest.
So what does this disconnect, this fundamental gap, mean for you, the listener?
Well, it creates significant potential for market volatility. That's the big risk.
How so?
If the Fed actually sticks to its dot plot, holds rates higher for longer, well, markets betting on earlier cuts could be seriously disappointed.
Leading to sell-offs, asset price corrections.
Potentially, yes. But then the flip side, if the economy suddenly worsens, maybe faster than expected, and it forces the Fed to cut sooner.
That's good news, right? Cheaper money.
Not necessarily. It could actually signal underlying economic weakness, not strength. So it's tricky. The report really emphasizes the Fed's cautious stance. Deeply cautious. Even though inflation has been cooling, CPI around 2.4%, core around 2.8%, they seem really worried about reigniting it.
Maybe because of things like those new tariffs. Over $200 billion in imports.
That could definitely be part of their calculation, yeah. A deep concern about stoking inflation again?
Okay, let's shift to another case study. The report uses Ukraine's exchange rate.
Right, a very different macroeconomic situation. Ukraine's currency, the hryvnia, or UAH, it's been artificially pegged, kept around 41, 42 UAH to the US dollar by their national bank, the NBU.
And how have they managed that?
Mainly through massive financial injections from Western allies. That's what's propping it up.
Which sounds unsustainable.
Well, yeah. What's quite telling is while the NBU announced a move towards managed flexibility, the report says they still exert significant control.
So not really flexible then?
Not entirely. And this strategy, maybe it was necessary during the height of the war to stop hyperinflation.
Understandable.
But it's clearly not sustainable long-term without that continuous huge external support. The report notes the hryvnia is reportedly depreciating like over 15% in unofficial markets.
15%?
Yeah. And physical currency exchanges, they often have hidden costs, implied costs of up to 5%.
Ouch.
Which has led to people using peer-to-peer platforms, P2P, like Binance, Whitebit.
To bypass the official system?
Essentially, yeah. To exchange currency directly with each other. It really highlights a potential, lack of trust in the official banking channels for getting efficient currency conversion done.
Okay, let's pivot now. Technology, always exciting, always complex. Autonomous vehicles, the report zooms in on Tesla's Robotaxi launch.
Right. Tesla officially launched its Robotaxi service, Austin, Texas, June 22nd, 2025.
And how did that roll out? Big fleet?
Actually, no. Started really small. Just 10 to 20 Model Y Robotaxis operating in a specific geofenced area.
Geofenced, okay. And drivers?
Crucially, yes. Safety drivers present in the vehicles. And the rides have a fixed price, $4.20.
$4.20. Okay. But what's remarkable is the market reaction to this limited test run.
Incredible. Tesla stock, TSLA, it surged over 9% right after the launch.
Adding how much in value?
Nearly $100 billion, pushing its market cap to roughly $1.03 trillion.
$1 trillion off a 10-car test.
Pretty much. And the report's analysis suggests if they can actually scale this successfully, big if, it could push Tesla's market cap to maybe $1.5, even $2 trillion.
Which would dwarf current ride-sharing companies. Uber's around $175 billion, you said.
Far surpasses them, yeah. But this also raises a really important question for you, the listener.
Which is?
Elon Musk. He has this history of, let's say, ambitious promises, often delayed. Remember back in 2019? 1 million robotaxis next year.
Right, that didn't quite happen.
His vision is grand, though. Millions of existing Tesla owners converting their cars into self-driving taxis with just a software update, earning income while the car's idle.
Using just cameras, unlike competitors like Waymo with expensive LiDAR and radar.
Exactly, that's the pitch. But the report highlights this massive stock jump, this $1 trillion valuation after such a limited test.
Yeah.
Combined with Musk's track record, plus skepticism from actual experts like Philip Koopman at Carnegie Mellon, who warns broad adoption could take years or even decades.
So what does that suggest?
It suggests a significant portion of Tesla's valuation is driven by, well, speculation, a Musk premium. Betting on future potential, not current operations or proven profit.
Which makes it
a high-risk, high-reward investment scenario. You're essentially betting heavily on Musk's ability to deliver on these huge promises, despite the history of delays.
Which brings us squarely to safety. Always the big question mark with AVs. Public trust, adoption, it all hinges on this.
Absolutely crucial. And the NHTSA, that's the National Highway Traffic Safety Administration, they're actively investigating incidents involving Tesla Robotaxis.
Including those videos you see online sometimes. Cars doing weird things.
Yeah, social media videos showing vehicles apparently violating traffic laws. That's part of it.
So what does the data actually say about safety? Because it seems confusing.
It does seem conflicting based on the report. NHTSA data shows Tesla vehicles were involved in a pretty significant chunk, 53.9% of all reported AV accidents between 2019 and 2024.
Over half.
Yeah, which led to that big recall. Over 362,000 Teslas back in Feb 2023 over concerns with the driver assist system.
And studies show AVs struggle with complex stuff, like turns at intersections.
That's what some studies indicate, yes. But then you have Tesla's own safety report, Q1 2025.
And what does that say?
It claims a much, much lower crash rate. One crash per 7.44 million miles with autopilot active.
Compared to what?
Compared to 1.51 million miles without autopilot. And the national average for human drivers is roughly one crash every 702,000 miles.
So Tesla's data suggests autopilot is like 10 times safer.
Roughly, yeah. That's their claim. Though the report does caution, comparing these different data sets directly can be methodologically misleading. Different reporting criteria, different contexts.
So what does this huge perception gap mean? Public seeing scary videos and NHTSA stats? Companies showing safety data?
It means there's a real problem. This chasm, this gap, it can seriously hinder public trust. And without trust, you don't get widespread adoption, no matter how good the underlying tech might actually be or become.
So regulators have a massive challenge.
Huge. Standardizing reporting. Establishing clear, objective safety metrics that everyone, companies, public regulators can actually agree on. It's a tough job.
Okay. Beyond economics and tech, the report then really digs into some profound social and demographic challenges. It uses Ukraine as a stark example, but then broadens the critique.
Yeah, it starts with Ukraine's ongoing struggle. Systemic corruption.
How's that looking now?
Well, there was slight improvement in the Corruption Perception Index, the CPI, back in 2022, scored 33 out of 100. But by 2024, it actually worsened slightly, up to 35 out of 100. The report attributes this to maybe a formal approach to reforms, ticking boxes, or even deliberate delays.
What kind of specific concerns does it mention?
Things like excessive electoral protection, nepotism, reserving jobs, shadow trading, covert party financing, and these really suspiciously close ties between politics and business.
Despite some successes, like that Prozoro system.
Yeah, Prozoro sale, the auction system, has brought in over 69 billion hryvnia for the budget. That's a positive.
But
big setbacks, too, like making electronic asset declarations for officials optional during wartime. That's a huge threat to accountability, especially around illicit enrichment.
Wow. Optional.
And an internal perspective cited in the report, it's pretty blunt, suggests Ukrainian corruption is potentially more powerful than Russian in its impact.
In connecting this to the bigger picture, how does this corruption hinder the country?
Actively. The report suggests it hinders national development directly. Security forces and officials siphoning huge amounts of revenue. That's a quote.
Siphoning revenue.
And it's also accused of basically destroying technical education, damaging the scientific base, leading to severe brain drain.
Is that why drone manufacturers are moving to Poland, like the report mentions?
That's the example given, yes.
Yeah.
It illustrates that systemic corruption isn't just, an economic leak. It's a fundamental block.
To long-term development competitiveness.
Exactly. It stifles innovation. It actively incentivizes your best and brightest talent to just leave.
Which leads us straight into Ukraine's education crisis, doesn't it?
Directly. The report notes, it's been over 4 years now of interrupted schooling. First, COVID, now the war.
Impacting how many children?
About 4 million children affected. And 600,000 of them have had absolutely no access to in-person learning at all.
600,000. Just learning remotely or not at all?
Or not at all, in some cases. And the learning outcomes, they've worsened significantly. Data from 2022 showed kids were already 2 years behind in reading.
2 years?
1 year behind in math, half a year in science. And that gap is likely only widened since then.
What's especially chilling, I think, for you listening is the report's concern that a whole generation will end up 2 to 3 grades behind their peers in, say, Poland.
Yeah.
Partly due to lack of competition, but also just the crumbling infrastructure.
The physical damage is immense. Over 1 in 10 educational institutions damaged. Over 1 in 5 just closed because they don't have bomb shelters.
So this isn't just about catching up on lessons.
No, it's about the long-term intellectual potential, the competitiveness of Ukraine's entire future workforce. It's deeply worrying.
And this education crisis, it feeds into the demographic crisis, right?
Profoundly connected, yes. Ukraine faces just a severe population decline. The estimate in Kyiv-controlled territory it's shrunk by maybe 45%, down to around 29 million people.
45%. That's staggering. Where have people gone?
Almost 7 million Ukrainian refugees are living abroad. And in 2024 alone, the net outflow of people leaving minus people returning was 442,000.
Nearly triple the year before.
Nearly triple 2023 figures, yes.
And what's really unsettling, the report highlights this trend. Refugees are less willing to go back.
Yeah, that's a critical point. By November 2024, the share who actually planned to return dropped below 50%. For the first time since the invasion started.
Below half.
Alarmingly, 19% of refugees have already applied for or even obtained citizenship in other countries.
And many more want to.
45% desire to. And the number deciding to stay abroad permanently, it's increasing by 100,000 to 150,000 people per month.
Good grief. Does the report break down who is less likely to return?
It does differentiate. The classic refugees, mostly women with children, their return readiness is low, only about 23%.
Okay.
But then there are the quasi-labor migrants, people who left mainly for economic reasons. Their intention to return is even lower, just 13.5%.
Why are they staying?
Well, the report suggests most Ukrainian refugees abroad have managed to nearly restore their pre-war living standards. They've found work, they get support from host governments.
And the report links this desire to stay abroad back to internal issues in Ukraine.
Explicitly. It links the country's stalled development, the need for young people to seek opportunities elsewhere, directly back to things like corruption, the actions of security forces and officials.
So it's not just the war driving immigration.
It's compounded. That, combined with falling birth rates, made worse by war mobilization, creates this dangerous self-reinforcing cycle. Hard to break.
So what does this multi-layered crisis mean for Ukraine's future? Long-term.
It's perhaps the most critical long-term threat, this demographic crisis. Amplified by war, amplified by these deep internal issues.
How so?
A shrinking, aging population, suffering significant brain drain. It severely limits the country's economic potential. It shrinks the tax base needed to fund services.
Creates labor shortages.
Chronic labor shortages.
Yeah.
And makes a country incredibly reliant on perpetual external aid just to function. It's a very tough outlook.
Now, moving from that specific tragic case, the report takes on a broader social challenge, what it calls the cult of success in modern society.
Yeah, it really critically analyzes where this comes from and what its consequences are.
And it starts by questioning that basic assumption. More money equals more happiness.
Right. It challenges that directly. Cites studies suggesting there's actually an optimal annual income for happiness. Around $100,000 for Americans and Europeans. Lower elsewhere, maybe $35,000 for Latin Americans, $45,000 for Eastern Europeans.
Interesting.
It even notes that earning too much, using an example of over 250,000 rubles a month, about 2,700 US dollars, can paradoxically make you the poorest of the rich, potentially causing unhappiness.
How does it explain the cult part? Where does this obsession come from?
It points to a pervasive societal habit. Constant evaluation, constant comparison, often rooted right back in schooling grades, rankings, even physical comparisons in gym class. This shapes a mindset where your entire personality feels like it's being graded constantly.
That carries into adulthood.
Big time, leading to a kind of grade inflation, where high scores, high achievements become the expected norm. Anything lower feels suspicious, like failure.
And it encourages cutting corners.
It can subtly encourage manipulation or even cheating just to hit those metrics everyone expects.
What about the self-made myth, so powerful in our culture?
The report really tries to debunk that. Shows over 94% of people considered highly successful actually attended college or elite schools.
Highlighting survivorship bias.
Exactly. We see the few who made it ignore the vast majority who didn't, despite similar efforts. It uses Elon Musk again as an example.
Often portrayed as the ultimate self-made man.
Right. But the report points out his wealthy family background and the significant government subsidies, over $5 billion his companies received, not quite pulling himself up by his bootstraps alone.
And the 10,000-hour rule. Practice makes perfect.
Also challenged, the report states genetics and other innate factors might account for as much as 82% of an athlete's advantage. Talent matters a lot.
What about motivation? Can you be too motivated?
Apparently, yes. It cites the Yerkes-Dodson law. Performance improves with arousal or stress up to a point, then it declines. Overmotivation becomes counterproductive.
Stress takes over.
Precisely. And it's quite critical of many self-development and success courses out there.
Why?
Notes that some have devolved into what it calls psychocults, using manipulative tactics, which have tragically led to breakdowns, even suicides in some reported cases.
That's dark. Does it trace the historical roots of this success obsession?
It does. Links it back to Protestantism, particularly Calvinism, the idea that wealth accumulation could be seen as a sign of divine favor, of being chosen.
And that merged with American capitalism.
Profoundly merged, yes, creating this powerful cultural drive.
Okay, finally on this, it raises a critical question for you, the listener. The environmental cost.
Yes, starkly highlights the environmental unsustainability of our current global success model.
How does it illustrate that?
Uses a striking example. If all 8 billion people on Earth lived like citizens of the Emirates, we'd need 4.5 Earths to sustain that lifestyle.
4.5 planets.
And the report even uses its own narrator's lifestyle as a benchmark, stating it would require 6 planets if everyone lived that way. Clearly impossible.
So what's the alternative proposed?
A fundamental shift towards what the report calls a culture of care and collective well-being.
Citing examples.
Yeah, like Norway, responsibly investing its huge oil wealth into public welfare, social safety nets, or Sweden's Lagom principle.
Lagom.
Roughly translates to just enough or sufficient, prioritizing balanced family, friends, hobbies over just excessive work and material display.
So a profound reevaluation of value economic models.
That's the suggestion. Prioritizing collective well-being, environmental protection over just endless, hyper-individualistic accumulation.
So as we've heard throughout this whole deep dive, these aren't isolated issues, are they? Geopolitics, economics, tech, social crises, they're all deeply interconnected.
That's really the core message woven through the report. There's this profound symbiotic relationship. It all ties together.
How so? Give us an example.
Okay, geopolitical tensions, like we discussed in the Middle East, they directly impact global commodity prices, oil, shipping,
Right.
supply chain stability.
Which then affects
Macroeconomic conditions, inflation, growth, which central banks like the Fed then have to react to with monetary policy.
And those policies are shaped by
Economic realities, yes, but also influenced by those global events and often domestic political pressure, too. It's all linked.
and technology fits in how?
Meanwhile, you have tech breakthroughs like autonomous vehicles, creating huge new economic opportunities. But their adoption depends entirely on navigating complex regulations, ensuring safety, building that public trust we talked about.
And the situation in Ukraine seems to pull all these threads together.
It's a tragically vivid demonstration, yes. Geopolitical conflict, the war, it just exacerbates all the existing internal weaknesses. The corruption, the failing education system.
It triggers those massive demographic shifts, emigration.
Exactly. And then these factors all feed off each other, mutually reinforcing, creating this incredibly complex, multi-layered crisis.
It's not just one problem.
Far from it. War displacement hits education. Poor education prospects fuel more emigration. Corruption hinders any effective recovery or rebuilding. It's a really challenging feedback loop.
So the report's big point is, these things don't happen in isolation?
Rarely. Modern global challenges often form these complex, self-sustaining feedback loops. You can't just fix one piece.
So trying to solve one issue alone might just be pointless.
It might be ineffective, yeah, if you don't also address the underlying interconnected systemic problems. Truly sustainable solutions need holistic thinking, multifaceted interventions, considering the whole ecosystem.
And finally, that critique of the cult of success and the proposal for a culture of care, that points to maybe a broader shift.
It suggests a potentially significant societal shift in how we even define success and well-being globally.
And it's not just theory.
No, the report argues it reflects real-world examples, Norway, Sweden, countries actively prioritizing collective welfare, sustainable living over just that hyper-individualistic wealth chase.
And if that paradigm shift gains momentum,
It could profoundly change everything: consumer behavior, investment patterns, government policy priorities.
making things like ESG, environmental, social, governance even more central.
Suggests a future where those factors become absolutely core to how businesses operate and where investment flows. A very different future.
Okay, as we wrap up this deep dive then, it's undeniably clear we're navigating a really complex, intricately interconnected global landscape.
Absolutely. So to maybe summarize the key takeaways for you, the listener. Markets. We seem surprisingly resilient to local conflicts, but definitely be prepared for that higher for longer interest rate scenario from central banks.
Okay, what else?
Technology. Incredibly exciting, yes, but faces really long roads to true mass scale. Regulation, public trust, those are huge hurdles.
And Ukraine.
Ukraine faces just a profound human capital crisis. Driven by the conflict, yes, but also deep internal governance issues. It poses a grave, long-term threat to the country's future viability.
And overarching all this,
Our very definition of success, it needs a critical rethink, moving beyond just material stuff towards collective well-being, sustainability.
so these strategic points suggest that for you, whether you're an investor, policymaker, just a curious citizen, adaptation and seeing the whole picture are crucial now.
Absolutely. A holistic perspective is key. The report's insights really push us to see that solving global challenges isn't just about fixing individual problems one by one.
It's about understanding the web.
Understanding and addressing the intricate web that connects them all.
So as you go about your week, maybe consider this provocative thought. In a world where, as our sources suggest, chasing traditional success might actually lead to unhappiness and is definitely environmentally unsustainable, and where real-world crises, like in Ukraine, are constantly made worse by deep-seated internal systemic problems, what might it actually look like to truly redefine success?
Yeah.
Not just for ourselves as individuals, but maybe for our communities and ultimately for the health of our shared planet.